Hi, good evening, everyone. Thank you for joining our webinar today. Hope every one of you are doing well. I am your MC today. My name is Huijun from Phillip Futures Marketing. If you have any questions, please leave your question in the question box and we will try to answer as much questions as we could during Q&A session. Today's webinar is about contract for differences, getting started on the right foot, which is the first module from our CFD webinar series featuring professional trader and managing partner of Asmodeus Trading Group PLT, Mr. David Low. He will be sharing about why trade CFDs, a unique opportunity to add to your trading arsenal, differences between trading stocks and stock CFDs, how using CFDs can enhance your investment returns, do's and don'ts of trading CFDs, understanding the pitfalls and opportunities. Before we invite our speaker, please allow me to introduce our company. As usual, I need to emphasize on our disclaimer where this presentation is provided to you solely for general information and does not constitute any recommendation. We are not liable for any losses arising based on this information. Investments are subject to investment risks, therefore you shall seek advice from qualified advisor before making any investment decision. CFDs may not be suitable for clients whose investment objective is preservation of capital and or whose risk tolerance is low. Clients are advised to understand the nature and risks involved in margin trading. Phillip Futures is a wholly owned subsidiary of Phillip Capital Holdings Sdn Bhd. It is incorporated on 7th of October 1995. Our headquarters is in KL and branches distributed across Malaysia, such as Kota Damansara, Malacca, Penang, Johor, Kuching, and also our opening of new branch at Sibu, Sarawak, East Malaysia on yesterday. Other than that, Phillip Futures is a trading participant of Bursa Malaysia Derivatives Bhd, clearing participant of Bursa Malaysia Derivatives Clearing Bhd, and also holder of Capital Market Services License, also known as CMSL. Phillip Futures is the first to provide an online trading platform for both local and foreign products. Our network is distributed around the world, besides Malaysia, in Asian countries such as Singapore, China, and Japan, and also European and American countries such as US, UK, and France. For futures, we offer products from different exchanges such as Bursa Malaysia, Singapore Exchange, CME, Seaboard, COMEX, NYMEX, and more. With our strength of global coverage, clients are able to trade both local and foreign futures products under the same platform. On the other hand, for CFD, currently we offer Bursa Malaysia Top 100 Stock CFD for the time being. With our strength of global network, it enables us to provide global coverage. We provide one-stop solution for your business. We offer various kinds of products categories for futures. For example, interest rate futures such as bonds, metal futures such as gold and silver, agricultural futures such as crude palm oil and soybeans, energy futures such as crude oil, gasoline, index futures such as KLCI Kuala Lumpur Composite Index. For contract for differences, we offer Bursa Malaysia Top 100 Stock CFD at the moment. Next, why should you choose Phillip? First of all, we provide advisory service such as product enquiries. Next, we offer a wide array of products for futures that enable clients to trade both local and foreign products. Other than that, we send out latest market news and commentary to clients every day through email for references. Lastly, Our headquarters has 24 hours broking and execution support. This is important for clients who trade foreign futures, and also dealers can assist your enquiries anytime. Okay, no matter you are our clients or not, we offer free one-to-one coaching sessions, free seminars and webinars, and free account opening. For free one-to-one coaching sessions, the key topics we're focusing on are introduction to futures trading, product knowledge, platform coaching, and charting system. We conduct free seminars and webinars regularly, but since we do not organize seminars at the moment, we focus to provide more live webinars with different topics for you to join. For upcoming webinars, we have Economy Outlook from before coronavirus to after coronavirus on 24th of June, CFD Module 2 Strategies for Trading Stock CFDs on 2nd of July, and CFD Module 3 Risks and Money Management Principles for Trading CFDs on 50th of July. If you are interested to join our webinars, feel free to visit our website from the link below or scan this QR code for more information and events updates. For free account opening, you will receive complimentary mobile and desktop platform at no cost and access to a wide array of products, including global futures, commodities, energy, interest rate, and metals. Great news is we have successfully launched the first futures trading online account opening in Malaysia. You can now open futures trading account online with no hassle. If you wish to open futures trading account online, feel free to visit our website or scan this QR code that will directly link you to the form. If you need guidance on online account opening, please do not hesitate to contact us. The platform for futures trading is Phillip Nova, which commonly used by our clients to access local and foreign products on desktop and mobile. It is a web-based platform and user-friendly, where you can trade anywhere and anytime. The platform for CFD trading is Phillip CFD Trader, where you can access Bursa Malaysia Top 100 Stock CFD for free. Advanced order types such as stop limit give you the flexibility to better deal with changing market conditions. Bringing together the best of intraday and historical charting, live chart showcases historical data of up to 20 years, as well as to the minute live data for top 100 stocks listed under Bursa Malaysia. Order prices can quickly change with time. By setting up an alert, you will get notified as soon as the price goes up or down. This helps you make a better decision on when to open or close a trade. Also, get customizable real-time updates on your desktop or email for your orders with our live order notifications. Finally, the long-awaiting promotions are here. To visit our website for complete details and terms and conditions. The latest ongoing promotion is CFD Bonanza Campaign 2020, which is valid from 50th of June to 50th of September 2020. So redeem your free trades up to 1,500 ringgit when you open a CFD account with Phillip Futures today for free. In addition, new clients and existing clients are entitled to enjoy cash rebates up to 1,500 ringgit every month once traded Bursa Top 100 shares CFD with us during the promotion period. So register now by scanning the QR code to leave your contact details. Our representative will then contact you as soon as possible. Our next promotion will be Phillip Futures All-Star Rewards, which valid from 1st June to 31st of July 2020. Trade Bursa, FLI, and FCPO and be one of our top 3 traders to receive cash rewards of up to 588 ringgit. In addition, new clients will be eligible for a one-time cash reward of 50 ringgit when a minimum of 5 lots of Bursa, FKLI, and or FCPO are traded during the promotion period. You may scan the QR code for more information and register to the promotion before it is too late. Connect with us now on Facebook, LinkedIn, and YouTube by searching Phillip Futures Sdn Bhd and Telegram by searching Phillip Futures. Do like or subscribe our page if you haven't. We are consistently update on our promotion, events, announcement, and market news. Our recorded webinars will be uploaded on our YouTube channel too. If you have any queries, please do not hesitate to contact us either through calls, emails, website, live chat, or Facebook Messenger. Our representative will contact you as soon as possible. Lastly, let me introduce our speaker today, Mr. David Low. David Low is currently a full-time trader and managing partner of Asmodeus Trading Group PLC, a consultation specializing in providing bespoke trading strategy and coaching for private and corporate clients in the equity or commodity derivative markets. He has 24 years of experience in Malaysia listed derivative industry, having held leadership positions in futures broker divisions of major investment banks in Malaysia. He is also the immediate past president of the Malaysian Futures Brokers Association from 2018 to 2019. Since 2000, David has spoken in seminars and workshops to over 5,000 retail traders on trading Bursa Malaysia derivatives as well as foreign futures markets. This includes live market trading sessions and webinars. Alright, without further ado, let's invite Mr. David Law for his session.
Good evening, everyone, and welcome to the webinar. Thank you, Hui Chen, for the fantastic introduction. I hope everybody is well. Before I restart, I'll just put on a poll so that everybody can put in their feedback. Can you hear me loud and clear? Okay, thank you. Looks like everybody is well connected. Okay, thank you for exercising your fingers. I still have a few questionnaires for you to help me with. I want to get to know a bit of the audience that we have today. So I'm going to put up another poll. Thank you for answering the first one on the audio chat. Let me put up this one. Now, how many of you trade stocks and shares? Come, feedback. Don't be shy. Stocks and shares. How many of you trade stocks and shares? Wow, a large, we've got like 85% of the attendees today trade stocks and shares. Okay, next poll coming up. How many of you trade futures? Yeah, futures. Thank you so much. Quite a number. Interesting. This is very interesting. About 63% of you trade futures. That's very interesting. That's very good. I'm going to ask the last poll. How many of you trade CFDs? There's still people trading CFDs. Fantastic. Okay, so we have a predominantly large amount of participants who trade stocks and shares, which is good because today's webinar will be talking about related to shares. So if you love to trade stocks and shares, CFDs is something I think you will really enjoy. So from the poll, only about 14% of you have traded CFDs. Okay, thank you so much for feedback. Thank you for exercising your fingers. I hope everybody is well. Okay, staying nice and safe and healthy in these very unique times. And thank you again for joining this webinar. For those of you who are driving and listening to the webinar, be safe. Watch the screen, the screen in front of you, your car screen, and not the screen on your phone. I used to do that as well. We're trying to catch some time on the way back from work. Okay, please be safe. Let me now show you my screen. Okay. I hope you can see my screen now. Okay, I'm going to enlarge it. Okay. I'm going to put it into full screen. Can everybody see? Okay, wonderful. First and foremost, I would like to thank the organizer, Phillip Futures Malaysia, for the invitation and the opportunity to share ideas on trading CFDs this evening. Right. So this is the first in the series. This is module 1, and it's an introductory module for those of you that are new to CFDs. For those 14% who have traded CFDs before, bear with us as well. Maybe there are some pointers inside here or some reminders that'd be good as well to take home to note as well. So let's start. CFDs, getting started on the right foot. What you will learn today, you will see already just now Hui Chen shared with you. We'll talk about why we should look at trading CFDs. It's a very unique opportunity. In Malaysia, the Securities Commission first approved the guidelines for CFDs to be launched in 2018. So now more and more companies in Malaysia, the brokers in Malaysia, will be launching CFDs as well. So you see CFDs in this market as well. Of course, I think CFD is not something really new for those who go online and who search for news on investments or trading portals and all that. You see a lot of this CFD advertisement popping up in your screen. So this CFD may not be something very new to everyone, but you may not have really delved into it. So today will be a very good opportunity to do that. And today specifically we'll be talking about the stock CFDs. So we want to look at the differences between trading stocks and stock CFDs. What is the difference? Okay, and how you can use CFDs to enhance your investment returns. We also talk about a very important subject, which is the do's and don'ts of trading CFDs. Okay, CFDs, of course, a very unique opportunity. There are a lot of opportunities as well, and to enhance your return, but you also need to understand there are certain pitfalls of CFDs as well, which we will cover in this presentation. This is the disclaimer. We have gone through it, so quickly read it. Okay, it's an important slide, very important slide. Finish reading already? Okay, so let's get into it. This is a slide that I want you to focus on. Okay, on the left, if you recognize this guy, his name is Johnny Depp, Captain Jack Sparrow from Pirates of the Caribbean. And then on the right, you have Arnold Schwarzenegger in his role as Colonel John Matrix of Commando. So if these two guys were to fight, okay, who do you think will win? I think the answer is quite obvious. Okay, not because Arnold Schwarzenegger is a very big guy. He obviously is, obviously is, right, a huge bodybuilder. But look at the tools that the guys are using. Johnny Depp has one gun, okay, one single gun. And this represents quite a common situation in investing in Malaysia. A lot of investors are concentrated only on one or two types of investment when they put their money in. Either they are in the stock market, and a lot of you are in the stock markets, as we can see in the polls just now, and only trade the stock market. Okay, some of you are more conservative. Some of you, maybe not everyone here, because 90% of you trade stocks, which is very good. Some of them who are more conservative, maybe even just have money in FDs, right, or in some bond structure, or buy bonds and all that. So they basically have a very limited tool. So in these times and trading environment or investment environment, I would recommend that you take the role something like this Colonel John Matrix with a lot of tools. You see, he has got his bazooka, he's got his knife here, and strapped around his belt. You have other things like bombs, explosives, and this gun here. So there are so many weapons that you can use. So if you arm yourself with a lot of these investing tools, okay, you'll be more flexible one way. Okay, you'll be more versatile in terms of trading, right? Because a lot of times, like the stock market, right, and this year is a good good example. You know, it's so volatile. There are a lot of opportunities, okay, then, and also there are a lot of difficulties as well, very challenging for some stock traders or stock investors. So if you have other tools, okay, in your arsenal, then you can do better in your investing because you have other different types of tools, right? So in the next slide, these are some of the tools that you may have. Some of you may have some, you may have one, or may have some mid to longer term investments like mutual funds, real estates, ETFs, or stocks and shares. Some of you hold stocks and shares for long term, mid term. Some of you do short term trading as well. We have 60% of our client participants today doing futures. Okay, some of you do options as well, perhaps call warrants and all that. And some of you, 14% of you, do CFDs. That's fantastic, right? And then you have hedging instruments as well. So even things like futures and options and CFDs can be used as instruments to hedge, as an insurance against your main portfolio. If you're holding a portfolio of shares, you could hedge it with futures. If you hold individual shares, you can even use CFDs to hedge, which we will talk a bit about that, right? And some of you may have alternative investments. Some of you have interest in art, collectibles. Some of you have access to hedge funds. Okay, some of you keep gold, precious metals, and over the last couple of years, some of you may have some cryptocurrencies. So the more of these tools you have in your arsenal, then the more flexible and the more versatile you are in terms of trading and investment, and the more opportunities you can capture. And the message for you today is CMD is one of those tools that you should have in your arsenal, right? Some of you have futures already, fantastic. Some of you have already got CFDs in your, that's fantastic. Okay, so the key point of this is have more tools in your trading arsenal. Okay, so let's look at the CFD universe. The CFD universe actually covers quite a lot of different instruments. And basically, without going to too much technicality, CFDs are tradable instruments that mirror, okay, the key point here is mirror the movement of an underlying asset, okay, and without actually owning the asset itself. So these are the key differences. So you have stock CFDs, okay, so the stock CFDs mirror the movement of the underlying stock without actually owning the stocks itself, right? Or you can trade the stock index CFD, right, which is basically mirroring the movement of the stock index. It can be a KLSE index, it can be a Dow Jones index, without actually trading the index itself, right? So it's a bit like a futures in this sense, stock index, right? Or even precious metals like gold, silver, okay? You can have a CFD on gold and silver without actually owning the asset itself, right? So it goes for commodities like wheat, corn, crude oil, even foreign exchange, dollar yens, dollar euro, and all that. So the CFD universe is very large. Okay, presently in Malaysia, okay, brokers can allow, or the Securities Commission has allowed CFD trading on two kinds of products. Number one is the stock index, okay, and number two is stocks, single stocks, right? So tonight we'll talk about single stocks, right? Phillip Futures offers single stock CFDs, which is actually a very, to me, it's a fantastic product that stocks, those who trade in the stock market should actually have a look. So let's go on. So why do traders choose CFD? The main reason why traders choose CFD is because of leverage. Okay, this keyword here, which we'll cover in a few slides later from now, because leverage greatly enhance returns. Okay, this is the key thing. Okay, leverage. And of course, CFDs allow you the flexibility. As you can see from the CFD Universe just now, there's a lot of different asset classes that you can use CFDs to trade on. Okay, so when Malaysia comes on this opportunity to trade other types of asset classes, look into it as well. Hedging. Okay, hedging is one key point. For stock CFDs currently, the environment, there is a restriction on short selling. Right? If there's no restriction in short selling, or if short selling is available, then you can actually use the CFD to short sell a CFD. Right? This is one unique feature of stock CFD is the actually ability to go short. That means to sell first and profit from a fall in the price of the stock. Right? And you can use that as a hedging tool against your actual stocks that you're holding. Right? At the moment, because of the restrictions on short selling, this is not available yet. So Phillip Futures will, of course, advise you when this particular feature is available for you to use, right? So it's a bit different from futures trading, although there are a lot of what do you call that, similarities between CFDs and futures trading. But there are some subtle differences, like there's no expiry in CFDs, whereas there's expiry in futures. You need to roll it forward. The trading costs and all that are different. So there are differences, although between CFDs and futures, there are a lot of similarities, right? We spoke about the ability to short, the ability to trade small sizes as well. Some CFDs like the stock index CFDs and also commodity CFDs and all that, you can actually trade fractional sizes. So you can trade smaller sizes if you want, right? In futures, of course, there are standard sizes, but in CFDs, you can trade smaller sizes. And because of that, they are also potentially lower trading costs. Certain CFDs, there's no commission, right? There's only the spread. So these are the unique features of CFDs. So let's move on. In Malaysia, we have a special situation here. Okay, currently for CFDs, it can only be offered to sophisticated investors, okay, as defined by the Securities Commission's guidelines. And basically, sophisticated investors are high net worth individuals, as defined in Part 1 of the Schedule 6-7 of the CMSA. Okay, so that is something you need to note. Okay, this is for sophisticated investors. And as a thing to note as well, Securities Commission would like you to be aware that CFD is a leverage product, and investors are advised to fully understand the risks associated with CFDs before trading them. Okay, I don't want to make it sound as if it's a very complicated product. In fact, CFDs are actually quite simple products to understand. As we defined it just now, it's basically mirroring an underlying asset without actually trading the asset itself, right? So it's actually a simple product, okay, despite all these warnings and all that. So let's move on. Okay, let's talk about stocks versus stock CFDs. Okay, what are the differences, right? Firstly, for stocks, you trade the underlying shares listed on the stock exchange, right? You have direct ownership of the stocks, right? And when you buy a stock, you are a registered owner, and this ownership of the shares is maintained in the CDS registrar. Okay, for stock CFDs, the price or the trading or the price of the CFD is derived from the underlying stock price itself. So let's say, for example, if you are trading a stock CFD, or say a stock like okay, Top Glove, okay, Top Glove, the darling of the stocks for the last 1 or 2 months. If you own Top Glove shares, so you actually have the Top Glove shares in your CDS registered to you as owner. Whereas if you're trading a Top Glove CFD, you actually just trading the underlying stock price, right? You don't actually own it. There's no direct ownership of the underlying shares, right? And the contract is actually, the contract is between the CFD provider, which is Phillip Futures, and yourself, right? So the contract is between you, whereas in stocks you are registered and your ownership is maintained in the CDS. Okay, in stocks there is no leverage. What do you mean by no leverage? Okay, unless you have share margin finance, right, which gives you about 2+ leverage. there is basically you pay full up for the shares that you buy, for the full purchase price of the shares that you buy. In stock CFDs, you trade on margins, right? So you either pay 10% or 20% of the value of the shares that you actually bought. So this is a very powerful feature which we'll look into. Okay, and in terms of trading costs, in stocks is slightly different from stock CFDs. In stocks, of course, you have the usual brokerage commission, the exchange clearing fees, and also stamp duty. In stock CFDs, you have, of course, the brokerage commission, but you have this thing called financing charges. Okay, this is something that you can speak to Phillip Futures on the financing charges. It's slightly different because you are, in a way, we are putting up a margin of say 10 to 20%, and the balance part of it, the 90% or the 80% of it is actually finance. So there's the finance charges attached to the trading of stock CFDs. Okay, we want to talk about this term longs and shorts. Longs and shorts are if those of you who are familiar with futures, all right, you already know what's a long and the shorts. For those who are just trading stocks, you may not be so familiar with this term long and shorts because you basically buy and then to take profit you sell. So in terms of derivatives trading in CFDs and in futures, going long is basically buying with the view of the CFD price going up. So if you think a price of a stock is going up and you're buying the CFD, then basically the term is going long, right? And then the opposite is going short. So if you think the price of the stock or the stock CFD is going down, then you will go short. Okay, so you basically is a sell. So these are terms that we use in trading CFDs, going long and going short, just to differentiate. Sometimes you can confuse this going buy and sell. So we technically use the words long and short, just to clear up some of the terms that we use. Okay, there is another term in CFD that you may come across. If you meet different brokers, they will talk about their particular feature. And there is this thing called DMA versus market maker, direct market access DMA or market maker model. Okay, in terms of Phillip Futures uses for the CFDs, the stock CFDs, they use a direct market access. Okay, what this means simply is whatever you buy and sell in stock CFDs via the DMA model is reflected in the share prices in Bursa Malaysia, in the exchange itself, right? You actually place an order directly in the underlying exchange, right? So if you buy 1,000 shares in a particular stock CFD, it will actually reflect in the underlying share volume in the exchange, right? So the CFD client is essentially what we call a price maker. That means he puts his price up there, okay? And your orders are actually shown in the exchange, right? So DMA prices for stocks are reflected directly. So this is as close as trading basically the stock market itself, right? But with extra enhanced features. Whereas the market maker model is slightly different to differentiate it. Basically, in terms of market maker model, the CFD provider, who is the market maker, will quote their own price for the underlying instrument. Okay, and the prices that they quote, the buy and sell, the bid offer, could be differing from the actual price in the market. It could be, okay, although these days in most cases they are quite identical to underlying market. Okay, so in effect, when you're trading the market maker model, you are a price taker because the prices are put up by the market maker, which are basically not human beings putting up prices. It's actually a algorithm, a market making algorithm, basically a robot that actually makes the prices there. Okay, it's not human beings typing in prices there, and so you are a price taker. Okay, whatever is shown there and on the screen, the buy and the sell prices, you are a price taker. So this is just to differentiate so that you understand what's the difference between DMA versus market maker. So the direct market access is as close as basically trading the actual exchange prices itself, right? If you have any questions, feel free to keep in mind and put it in the chat group later so that we can handle your questions. Okay, this is an important slide. Okay, this is margins. Okay, and this is something you need to note. Okay, all CFDs are traded on margins, and margins are minimum deposits required for holding a CFD position. Okay, and this is a relatively small percentage of the value of the instrument. Okay, and the SC has a recommended rate actually. Okay, minimums, right? So you can see in single stock CFDs, 10% for index stocks, 20% for non-index stocks. So for Phillip Futures, the top 30 FBM KLCI stocks is 10%. Okay, except I think currently for the stocks which are rubber counters in the top 30, it's 20% due to the volatility and due to some of the capping that a lot of brokers are putting on due to the volatility of the rubber counters. Index stocks are FBM KLCI 30 is 10%, and for the FBM 70, the rest of the 70 stocks is 20%. Okay, so for index CFDs currently haven't been offered yet by Phillip Futures. The index CFDs is 5%. These are the recommended minimums by the Securities Commission, right? So you can see, for example, if you buy a blue chip top 30 stock on KLCI as a CFD, you basically just pay 10%. Okay, and when you say you pay 10%, basically you're paying 1/10 of the total value of the shares that you're buying. So your leverage is actually 10 times, and this is the most powerful feature. And people who trade CFDs are basically looking for this feature, right? So let's explore this feature a bit more. Okay, basically, if you see the picture on the right, it's using a smaller capital. Okay, say for example, that 1 stone. Okay, to hold up or to leverage 10 stones, right? 10% of deposit to leverage 100% of the value of the shares. Okay, and these initial margins, okay, is the one that activates the feature in CFD, and this is the most powerful feature in CFD trading. Okay, basically allows you to control a larger size investment with a smaller capital outlay. So this is a very efficient way of using capital, right? And CFDs typically offer between 5 to 20 times leverage. So let's look at an example of how this works, right? This is a comparative effect between a pure cash buyer, okay? Let's say, for example, you buy 100,000 worth of Maybank shares, right? Normally, after the settlement period, you have to pay up your cash purchase of 100,000. So if you are a cash buyer of Maybank shares, you buy 100,000 worth of Maybank shares, then during the settlement period, you would have to pay 100%, which is 100,000 for your share purchase. Now, if you are a savvy trader, okay, you can say, hey, you know, let me open up an account with Phillip Futures, and then I'll buy a Maybank CFD, right? Because what I need to do is I only need to put up 10%. Okay, it's an index stock, so 10%. So I only need to put up 10,000 ringgit for the same amount of shares worth in terms of value, 100,000 ringgit worth of Maybank shares, right? So this savvy trader uses a new tool. As I say, we need more tools in your trading arsenal. And then what he gets is the savvy trader gets 10 times leverage. Okay, how do we get the 10 times leverage? The full value, 100,000, divided by his margin, which he pays up, 10,000, you get 10 times, right? That's how you get the leverage factor. So if Maybank shares were to go up by 10%, okay, both of you have 10,000 ringgit worth of Maybank shares, right? One is in CFD and one is in cash, right? You bought cash. So if Maybank shares were to go up by 10%, both the cash and the savvy trader would have made 10,000, right? 10% of 100,000 is 10,000. However, the return is very different, okay, for the savvy trader, because the savvy trader would have made 100%, right? His deposit was 10,000 for the CFD, and he made 10,000. So the savvy trader earned 100%, while the cash investor earned 10%. So this is the effect. This is the effect of leverage, and this is the power, and this is the main feature of trading CFDs. Okay, let's move on. Okay, so is leverage your friend or your foe? You know, because when we talk about leverage, it's what we call a double-edged sword. Okay, it cuts both ways. Okay, So it can be a good friend, and it can also hurt you if you don't know how to use it, right? So the pros, of course, of leverage is you can enhance your returns, smaller capital outlay, the higher the leverage, the more efficient the use of capital. And if you are I wouldn't say professional, if you know how to use and recognize the power of leverage and know how to take advantage of this tool, well, it will benefit you. Okay, but if you are an investor that you don't know how to use it, or you don't know how to control it, okay, you can actually very easy to overtrade. Okay, you take more risk than you can actually afford, right? And this leverage, which you'll see later, can actually multiply your losses as well. So what if Maybank shares drop by 10%? Right? If Maybank shares drop by 10%, then the guy who bought the CFD would have lost how much? He would have lost 100% of his deposit, right? So basically, he lost his 10,000 bucks. So that 10,000 ringgit. So you gotta have that in mind, right? And in the next module 2 and module 3, we will share ideas on how to control so that you don't get into that situation. Okay, so if you don't know how to use leverage, losses could go beyond your initial capital. So this is something that you really need to be aware of, right? So those people who start off, or amateur investors who are ignorant of how to use leverage, may actually make serious losses. So this is something to really note. The leverage is a very powerful tool, but you really need to know how to use this tool as well. So let's go to a case study. Okay, I don't know how many of these 90-something% of our participants today have top glove shares. Okay, and I just want to bring this is not, of course, not a recommendation of, but just a case study to see how the effects of CFDs and deficits and all that, right? So Top Glove Corporation Berhad on December 19, the last day of the trading day, closed at last year closed at $4.67, right? And this stock has been around that range, 250, 4 ringgit something, 3 ringgit something. It has been in that range. That's used to be their trading range, right? So on May 2020, which is 5 months later, at the end of May, right, just last month, it closed at 13.30, right? And this is the May story. Of course, it's gone up higher and it's reached 18 ringgit high a couple of days back. But just look at this time period between December and May, end of May. There has been a gain of 8 ringgit 63 cents per share, right? And the percentage gain is 285% in this case. So in scenario 1, if you are a cash buyer of Top Glove shares and you bought 1,000 shares of Top Glove, you paid basically 4,670 at the end of the closing of December if you bought it at that price, right? And contrast it to scenario 2, you bought 1,000 units of Top Glove CFD units at 467 ringgit margin. The same 1,000 shares, okay, by buying CFDs, you basically paid 467, right? And the gains year to date, the gains for the cash holder in scenario 1 and the CFD holder in scenario 2 is the same. So 1,000 shares with a gain of 8 ringgit 63 per share is 8,630. That's I think a lot of people don't even imagine that it could go to those prices, right? So but this is a unique situation. Okay, we had this virus came into the picture, and then there was this huge explosion of rubber counters in our stock exchange, right? So the scenario 1 returns a 285% return, which is it's fantastic, right? Fantastic. Of course, in scenario 2, the returns are 2,850%, which is even more amazing, right? So that is the impact of leverage, right? So now we're going to turn the picture. We're going to turn the leaf over to June 2020, right? We just turned this in the last 17 days. So June 1st, okay, Top Glove. And the funny thing is, a lot of I don't know who anybody of you started buying Top Glove only in June. I hope not, right? I hope not. It doesn't mean that you will lose money, but it's a later part of the cycle already, right? And in the module 2, we'll talk about how to time your entry so that you can get a better entry and don't need to like buy near the top of the market, right? Because a lot of times people miss the chance and then say, hey, you know, I got to chase this stock, or no, and then they start by June 1st at 1380 when so convinced that it will go up, okay? But it could be at the tail end. So senior one, if you bought on June 1st, you don't own Top Glove, guys, Top Glove shares, and you so convinced June that, you know, it's going to be fantastic. You buy 1,000 shares of Top Glove, and now you have to pay 13,800 for 1,000 shares, right? And if you buy 1,000 Top Glove CFD units, now the margin is 2,760 because margin has increased due to the volatility and all the capping, right? So margin for Top Glove shares are now 20% for the CFDs. So on June the 2nd, okay, you bought at 1380, presumably. And on June the 2nd, you have opening at 1480, open up higher, went to a high of 1556. Wow, fantastic, right? You made money. And then the low was near the opening time at 1410, which is here, this bar here, if you can see my cursor, right? And it closed at 1480. Wow, fantastic. 1 ringgit up. Fantastic. Okay. For the Top Glove CFD, right? He bought the 1,000 shares. Now he's 1,000 ringgit up. His investment was 2,760. So, but that's quite a good gain for a single day, right? But look at June 3rd, right? June 3rd was when they announced that a lot of the stockbrokers are putting on caps on this counter due to the volatility and due to the huge rise, you know, in the prices of rubber counters. And then there was a huge drop, right? There's a huge drop intraday for Top Glove. Top Glove was very resilient. Actually, it dropped to a low of 1085, which I put an asterisk here. So note on June 3rd, the low, the intraday low, you had a mark-to-market loss of 3,220. Okay, so this is something that you need to know. Share CFDs, shares can move quite a lot, right? Shares can move quite a lot even on an intraday basis. So in terms of the intraday loss on June 3rd, 3220, and you actually, if you had only a deficit of 2,760, it already exceeded your deficit. So there is what we call a mechanism of margin call, right? So your broker will call you up and say, hey, sir, the market has gone down quite some, and then it's below your margin requirement. Okay, normally they will call you more in advance than before it goes to zero. Of course, they normally will monitor your position and see where you are, and they will call you and say, sir, you know, you need to put in more cash. So this is the mechanism of what we call margin call, just to let you know, right? So if what you're holding, the losses are more than your deficits, then you need to top it up to the minimums, right? Which is the 2760 on top of the losses that you have, right? But luckily, you know, by the time before you even your deposit has gone through intraday into the bank, Top Glove was very resilient. It closed the day at 1470, so almost unchanged for the day it started, right? And on June 10th, it had a closing high of 1708, right? So you actually made money, a profit of 3,200 on June 10th. And if you held that, if that particular buyer held the 1,000 shares since June the 1st, of course, they've hit the 18 ringgit high a couple of days back. So how is it going to go? Is it continuing to go? Well, nobody knows, but we can study that in charts in next module 2, which will coming, and we'll see when's the best time to take some profits as well, right? So that's what we're going to cover in module 2, right? So this is just an example for you as a case study to show price movements and its impact on your account and your equity. Okay, so if you have any questions on that, you can ask in the chat group afterwards. So let's go on. So stock CFDs, so its pitfalls, they are its risks. It's not without its risks. Okay, so these are things you need to look out for. You need to fully understand the impact of leverage. So we saw in the example of Top Glove, right? The things that can happen and the things, the scenarios that you need to be aware of, right? So use leverage wisely. Avoid over trading. Normally people will put up more funds than just their positions. They need to have a buffer. Okay, emotions can run high, especially, you know, in a fast moving market. Okay, and added with the leverage is like driving a sports car, right? A fast car, right? The faster you drive, of course, your emotions can run high. There's a lot of fear if it goes against you, and there's a lot of greed, of course, the market goes, and there's a lot of ego as well. So this is something we will talk about in the next few modules that come up in the next couple of modules 2 and 3. So risk management is very critical. Okay, what you need to have is an airbag strategy. That means it's a safety strategy in case things go wrong. Okay, you need to have an airbag strategy, which we'll talk in modules 3. Okay, and proper risk sizing as well. What is a good size to trade with the capital that you have? Okay, so the other thing that you need to know is recognizing the difference between trading and investing. CFD trading and stock investing is very different. Okay, let me show you in the next slide. Okay, this contrast between trading and investing. Okay, in investing is a longer term thing. You basically building wealth over an extended period of time, right? It's a buy and hold strategy. Now, buy and hold strategy, of course, is this is the, how shall we call it? This the Warren Buffett way of holding shares long term. Well, there's been a lot of debate whether buy and hold is better than trading. The debate still carries on, but this is a different way of investing, right? So basically, you hold long term, long holding periods, and returns expectations of 10 to 15% is quite normal, right? Malaysian share investors may not agree with me. It's a lot of them want more than that. Of course, everybody wants more than that. Okay, but in return of 10 to 15%, if you can get, it's very good. I mean, look at the FD rates these days, right? Like what, slightly above 2%, right? So 10 to 15% is excellent, right? But trading is different. Okay, it's buying and selling of stocks or stock indexes or CFDs, commodities, currency pairs, whatever. Okay, and the goal is generating returns that outperform buy and hold. Okay, you're trying to do better than buy and hold, right? Shorter trading periods. Okay, those of you who trade futures will know that. Those of you who already traded the CFDs, of course, it's shorter trading periods because leverage greatly enhances the return. So you have situations that your returns can come in pretty fast. Just that you saw Top Glove just now, you bought on June 1st 1380, and the next day it closes at 1470. You have like 1,000 ringgit or more in profits, right? So the return expectations is a bit different. Now 10 to 20% per month, it's not something I am promising you, okay, but this could be in the trader's mind that he wants to make 10 to 20%. So the expectations is different. The trading horizon, the timing is very different. So the way you act and the way you trade is different. So you will need to act faster, right? A lot of people say that they want to trade stocks, but I heard a lot of horror stories that a lot of trading become investing, right? So they're basically holding a lot of their darling stocks, actually not making money. That's why they're holding it, right? So you need to adopt a very different trading mentality when it comes to trading versus investing, right? So the roadmap to start trading CFDs, okay? So these are the few pointers to start trading CFDs. Of course, open an account with a reputable broker. Okay, these I need to stress, very, very important. There are a lot of CFD guys online. Okay, I don't know where they are incorporated in some very, very exotic places. You want to trade and keep your money safe, open an account with a reputable broker. People like Phillip Futures, we organize it today, right? These are regulated people. These are licensed people, right? Don't put your money anywhere or swipe your credit card anywhere just to put your funds to trade CFDs. Trade with people who are licensed to do it. Okay, very, very important. Research and learn about various types of strategies. Okay, there are, even among trading CFDs, there are different types of trading strategies. There's overnight trades and there are day trades, which we will share with you in the next couple of modules. Okay, pick the strategy that you feel is you're comfortable with, that you want to do that. Then determine what risk capital you're willing to invest. Okay, so in terms of trading instruments, of course, you don't put everything into one basket, right? So you have some money for longer term holding, something conservative to earn dividends, and you have something for risk capital for short-term trading. So you determine what risk capital you're willing to put. Okay, so of course, once you're ready, you deposit the margins and then you start. Okay, one advice, of course, is best to trade what you understand and the stocks that you are familiar with. Okay, Don't trade or invest in things that you don't understand. Okay, start smaller and grow your portfolio as your skill and familiarity with CFDs increases. Right, this is just like driving a car. Right, when you first start to drive a car, you drive slower, you don't immediately step on the throttle. Right, so once you're more what do you call that, experience in driving a car, then of course you can drive faster. Of course, I'll still advocate driving safely, right? Although you are a better driver now, right? So start smaller and grow your portfolio as your skill increase. So again, we end with this: who will win? Okay, obviously, okay, put CFDs as one of your tools. Okay, be like Colonel John Matrix. Have a lot more tools. Have a lot more stuff going so that your investment can grow better. Next, we will go Q&A. So please type your questions in the chat box. Hui Shen, the MC, will manage those questions. We have some time for questions if you have any. Hui Shen will summarize some of these questions in the chat box. So do
hi,
type
David.
in your question.
Yeah, we have one question over here.
Okay.
So the questions will be 10 to 20% return for trading. Is it realistic consider current scenario of COVID-19?
Okay, so yeah, that's a very interesting question. So if you are a trader, okay, when I say trading, of course, we're not just talking about CFDs, we're talking about futures. Of course, you can short, okay, you can sell, market in. But if you are selective, I think a lot of people also have made some money trading the penny stocks and all that. Okay, so is it realistic? Well, it depends on what stock you bought, right? If you bought things like rubber counters, you would have made a very handsome return. Okay, if you have bought a CFD on rubber counters, you would make a lot of money, of course, right? So the choice of what do you call that, what to buy or even what to short, it's important, right? So the key thing to be able to get returns as a trader, okay, that's why I say 10 to 20% is what we call a trader expectation. Because if you trade futures, you know that 10 to 20%, it's highly possible, right? If you're good at what you're doing. So in terms of answering that question, yes, it is possible, but you would need to know what you're doing. I hope that answers your question. Any other questions?
Let me see. We have another question here. What do you think that the short selling facility will be coming in? And then we have one that what is your cut loss percentage on average for each trade?
Okay, very interesting. The cut loss, stop loss strategies and all that, of course, we'll cover in modules 3. Okay, it depends on your risk appetite. My cut loss levels normally for a single trade will range between 2 to 5% of my equity balance. So if I had 100,000 to trade, okay, then my single trade, my maximum cut loss will be 2 to 5%. So it'd be 2,000 or 5,000. That's usually what I do as a trader, because you can't be right all the time. Sometimes you're wrong. So you want to make sure that when you're wrong or you have a couple of trades that didn't go well, you still not affect you, so that you can continue to trade, and there'll be the winners that will come. So for stop loss levels, basically my own personal stop loss levels is 2 to 5%. I hope that answers the question.
Okay, we have another question here, David.
Yes.
What is the typical spread for stock CFD?
Okay, for the DMA market, the DMA model, basically what you see on the share market, what are the buyers and sellers, that is the spread. Okay, so in DMA model, which Phillip provides, is whatever you see on the screen in the stock market is exactly the same spread. So there's no added spread. Phillip Futures does not add extra spread or widen the spread for you when you trade the stock CFDs. Hope that
Okay, I
answers.
think for the last question here, do you do profit trailing on CFD and how was it?
Yeah, I think profit trailing stops, if that is the question, is a good strategy to have, and we can, although we don't have time here today, we can cover that in the next module, which is module 2, happening on the 2nd of July, if I'm not mistaken. Let me just pull it down. Yeah, it's going to happen on 2nd of July. Yeah, I hope that answered the question, and we can deal with that. I'll talk about profit trailing stops in module 2. Any other questions that we're going to take?
Yeah, I think that's all for the question part.
Okay,
So
if that
if
is
you
the
have,
last question,
yeah,
I want
so
to
that
thank
one is
everyone
our last
for
question.
giving us the attention. I will pass you back to Hui Chen, and I hope to see you in the next 2 modules. Thank you very much.
Okay, so if you guys have any questions, to contact us and we are happy to assist you. So last but not least, to check out our CFD promo and grab the opportunity to join it. So with that, I will end the session today. Thank you everyone for your time to join our webinar today, and also many thanks to Mr. David Low for his insightful sharing on CFDs. See you on 2nd of July for CFD webinar module 2. So good night everyone.